This is a video I've wanted to record for some time. It's all about trading volume, an introduction to volume. Now, I think there are some pretty basic ways why volume matters and may not matter. And before I even get into that, let me just say that I've gone through many different sort of philosophies around volume. Early on, I didn't quite understand it. I was just getting started in trading, wasn't really, fully versed on the subject. Then I started to see great significance in it. What do volume spikes mean? What does it mean after earnings? What can I take away from these volume spikes? Then I sort of transitioned to just sort of a price trader. Don't let volume distract you, just focus on the price. Everything else is noise, simplify. And now, after a decade involved in taking all of these different stances, meeting people with different mindsets, meeting people who have different strategies, I've come to realize that actually volume is the most important thing. And yes, potentially even more important than price, simply because you can't trade certain assets if the volume isn't according to your specifications. Literally, if something only trades 2 shares a day and you have, that tens of thousands of dollars, it's probably not the wisest decision to trade that, because how are you going to get in? Where's the liquidity? How are you going to get out? There's not enough volume there for you to transact. Another way that's interesting to think about is, let's say you trade $500. That's all you have in your account. And Apple has a market cap nearing 3 trillion. You are a fraction of a fraction of a fraction of a fraction of that game. It doesn't matter what you do, you won't move the market, you won't impact it. You're going to have no say or anything on that market. So volume is sort of the first thing that I've come to realize you just have to look at before you even get started. Now, of course, why volume may not matter, though, that's still out there. Just like anything else in markets, there's some deception out there. That's how people make money. There's a lot of deception. You probably have read about what goes on behind the scenes ever since the GameStop, Robinhood cycle, payment for order flow, market makers. Like, there's always something weird going on. Even the quant traders, the high frequency traders who are trying to front run your trades, it's strange out there. People are trying to make money. They do strange things. Yes, they can probably do weird things with volume as well. I've often wondered, while it's great to see volume, it'd be great to actually also see who is actually trading all that volume. Naturally, it's really hard data to get, if not impossible. I'm sure someone out there has figured out how to get it. But nevertheless, these are certain things you always have to keep in mind. And it's like with everything in markets, you're at a poker table with people. No one's going to show you their hand. You just have to be reminded of that it's competitive and it is a game of people trying to win and ultimately beat each other. And sometimes things just won't make sense. So how does volume look? Well, I think you've seen something like this before. I'd be shocked if you haven't. Pull up any chart. For example, I've got this chart open of Coinbase. Well, there's no volume on this chart right now. You can see the bars down here. Well, if I want to pull up volume, I like to use TradingView. It's my favorite platform. I've had a great career with TradingView. Well, I can just search indicators, type volume, and here are the bars here. Now, volume's pretty interesting. You should know, because sometimes they are colored like this. So you might have colored bars sometimes. In fact, in this presentation I made, you can see that they are colored as well. You'll also notice that there are large spikes, small drawdowns, big spikes, medium spikes. Well, it's important to understand how to read this, the colors and the customizations. Okay, so I think what's quite important here, first of all, is that by default on most trading platforms, these volume bars are colored based on the price action of that specific day. So I'm just going to zoom in here, hover my mouse over this bar here. It is Tuesday, the 3rd of September, 2024. Looks like Coinbase opened up here at 181. Had a pretty crappy day because it went all the way down to here to 168. So it's red. It's a red candle. It dropped. It was red on the day. By extension, that volume bar then is also going to be red. So just letting you know it was a red day and there was trading volume. But don't look into the red bars much more than that, because you're never going to see on most default platforms, say, a green candle here and then a red bar. or a red candle here, and then a green bar. They're just following a sequence. If the symbol was up, the candle's going to be green, and the volume bar down here is also going to be green. That's all you have to know. That's the default option. But you can customize it. People have indicators, strategies, customizations. You can make this chart say and sing however you want, but I'm just telling you by default, it's important to keep in mind. Also, another very important thing to keep in mind about that as well is that the height of the volume bar tells you how much volume was traded. So when you see a really high and tall volume bar, let's see, there's one actually right here. There's a few actually. Well, this just tells you these were huge volume spikes. So you can very easily see on these specific days, there were massive volume spikes. Now, one of my favorite things to do on any chart before I ever get started is zoom out just like this and find those volume spikes. I like to get a reference point about what this specific stock, crypto, forex pair has done in the past. Like, what does its historical trading volume look like? Where are the outliers? Now, if you spot those outliers, I'm going to tell you something else I think is really fascinating. Go look into why those outliers happened. And you can do that very easily just by Googling the name, so it'd be Coinbase, and the date. And you're probably going to see a news article or an earnings release or some sort of event that corresponds with those spikes. And now you're really starting your research process to learn like what moves this particular asset. When does the trading volume come pouring in? Also, another thing that I think is rather helpful for these types of reference points as well is to just understand what the average volume may or may not look like. So you can double click oftentimes on TradingView. This is a wonderful feature. And so I'm just going to double click on the volume bars here. And you can see it says volume MA. MA stands for moving average. If I click MA, this blue line appears. Well, what does that mean? It's now going to take a moving average defined by you in inputs 20 and show you that rolling across the chart. Now, MA length 20 would mean period 20. I'm on a daily chart. You can see that. So this is a 20-day moving average. It looks at the last 20 days of volume, divides it by 20, and you get a rolling average. And you can just keep going back every 20 days, every 20 days, every 20 days. It's rolling back. So let's actually change this though to 100. Let's be a little more long-term focus. So 100 days. Let's make the line a little bit thicker so you just can't miss it. I'm going to change it to white here. And there's our 100-day moving average. So we've already done some pretty quick and dirty volume analysis here. We know the days with the largest spikes. It's been a while. They went back to 2022, 2023. And now we can see a beautiful moving average as well. What's interesting is that it looks like volume has been declining for some time. I have no idea why that's happening, and we're going to get into that as well. But I want to make sure that I stick to this presentation so that we all really, get a good feel for what volume is, because my plan here is to actually go kind of deep into volume. Now, this is where things do get important. So before I get to the volume bars here on this specific chart, as I mentioned, the customizations in the analysis of volume are incredibly advanced. And if you get really good, you're going to learn to love volume. It is going to be the best indicator that you have ever used if you start to use volume the right way. There's traditional volume. I just showed that to you. There's volume profiles. There's volume footprints. There's volume candles. There's these sort of new type of charts that you can utilize. I think you've maybe have heard of volume candles. There's really some fascinating ways to visualize volume. And before I get back to the traditional volume measure, which is these bars here, I want to show you some of these other volume features very quickly so you can get a feel for how they work and you can utilize them yourself. Now, one thing to recall before I get to these next volume features, you have to write this down and keep this in mind. These volume bars here down at the bottom are specifically sorted by date and time interval. So each bar shows you how much volume was traded on that specific day. So see my mouse hovering over this date? You can even see the date. Monday the 15th, July 2024. I know if I look at the top here, I can see these volume stats. Let's go back to Monday. There it is. There's 14.4 million shares traded on that day. Now imagine though, if you didn't look at volume by the day, but how much volume has traded at each price level over this set period of time. Well, you can do that. You can even look at how much volume traded at each price level by specific days, whether it was buying or selling volume. It's fascinating. So check this out. I'm going to delete this. I want to make sure I show you some of these other volume features so you get a feel for what's possible. Okay, time price opportunity here. We're going to go ahead and click that. And what we're now looking at here is quite literally, we are looking at a visual of how much trading occurred by a specific price as the day went on. So this is a very interesting way to look at volume. So A, B, so you can see the letters here, A, B, C, D, E, F, G, right? If you know the alphabet. Well, A is going to represent the 930. This is stocks, depending on what asset you're looking at. Just, connect the dots here. A represents the 930 open. And this is a 30-minute TPO. B would represent 10 a.m. C would represent 10:30 a.m. So you get the idea. You can now see how price traded every 30 minutes. It opened here, then it went to here, dropped to here. There's another B, then to this C, then to this D, then to this E. And you can follow the whole price history throughout the day just by connecting the letters to the time period. It's a time price opportunity. You can get some very interesting visuals this way of just sort of tracking like what's going on here. How did it move? What price levels had the most trading action throughout the day? I'll get into this in more detail in a bit. Volume footprint, ridiculously powerful tool for looking at volume. Probably the most powerful tool in markets, at least from my standpoint, that you could utilize at any point in time. Now, it looks noisy, but I promise you it's not noisy as you think once you just understand the basics of this. Okay, you can see there's a candlestick right here, right? There's the candlestick. At the left and at the right of this candlestick are two different data points, and you are looking at the buying volume and the selling volume. The data on the left is showing you the selling volume. The data on the right is showing you the buying volume. So within this candlestick, you get a feel for how many trades happened where the price went down on the trade, right? It traded at $1, and then the next trade was 99 cents, theoretically down volume. Traded at $1, the next trade traded at $1.01, theoretically up volume. So you are seeing all of that left and right of the candle. Then what's really cool is you can get a feel for, well, what's the delta? What's the difference between these buying and selling volume areas? Well, the delta was, in this case, minus 29,000. Subtract all of the selling volume from all of the buying volume, and you can see that there were arguably net sellers. Even though the candle closed in the green, there were more trades with price going down than price going up. Now remember, this all ties back to volume because you can only get this data by tracking the number of trades, which is volume. The sheer quantity of trades is volume, and then organizing that data next to price. Now, as mentioned, these are just some of the ways that you can analyze volume. And guess what, ladies and gentlemen, it goes even deeper. It's absolutely fascinating because you can also utilize volume indicators as well. Now, volume indicators are also some of my favorite tools. And I have to say, if you go to the TradingView YouTube channel, they've got great videos on all of these topics. I'm just going to show you one example. So now you can see volume indicators as well. My favorite is the visible range volume profile. This volume profile is a game changer for me. So I just click it. So I can utilize candlestick charts and then have these bars on the right. And if I zoom out here, what you're seeing is these bars appear. And what's so cool about the visible range volume profile is it automatically recalculates every time I change my chart. And what it's doing is it's using my chart that I can see right here as the starting point to calculate all of this volume data. So this is the starting point right here, Right here's the starting point. Now what's happening is the TradingView platform is looking at all of this trading history and all of the volume. And rather than showing the volume as bars by day down here, right? Recall that's what we're going to walk through. It's actually then reorganizing that volume to show you how much trading action happened at each price level over this time frame. So don't think about it on a daily basis or a minute by minute basis. It's all about how much trading volume happened at this price level. So let me show you an example. Let's just look at this price level right here. Let me actually clean up these drawings. There we go. This says 200. This price level, it shows from $221 a share to $230 a share. So how much trading volume happened in this region right here, right? Well, we can see there was some volume here then, right? You can theoretically just draw a straight line across, capture all of that volume. So it would be all of the shaded area in here, would be all of the transactions, and then reorganize that as a bar here on the right so you can compare and contrast it to all of the other price levels. This is a simply fantastic way to visualize volume. Like I said, this is my favorite tool. This is my go-to setup whenever I'm following markets. Because, for example, let's say I was thinking of trading Coinbase here. Well, first of all, going back to the start of our presentation, let's just remind ourselves traditional volume. That's what that looks like. Well, I already know Coinbase is just a massive company. It's trading 7 million shares, right? I can pull up the moving average. It's just a huge company. I don't have billions. I'm not moving this market. There's liquidity there. There's people trading this. There's institutions, funds. Should be no problem for me. So I can check the box on that. Okay, but now the next question then is, after I maybe do some more research into its fundamentals, maybe I want to look at its technicals. This seems like a very interesting low that held, but at the same time, it's clearly in a vicious downtrend. That's really a steep line. But before I do anything, even if the fundamentals check out, even if I think there's going to be some vicious breakout here in return, I first need to see if the volume supports the price levels that I'm eyeing, in the sense of, are other people watching this as well? Like, are there actual traders there who've been there? Maybe there's support, maybe there's resistance, maybe they're watching or guarding the level. Well, the first thing I observe about this chart is that actually what's so interesting from the time frame I'm looking at, this area that bounced was sort of the most recent significant area where there was lots of trading volume at these price levels. So let's just do this here. For whatever reason, at 146, there was quite a bit of trading volume here over this time. So that's interesting to me. Now, it's not nearly as large as this area down here, where the majority of trading volume happened. So that would be the ideal entry. If I really wanted to buy Coinbase, if I wanted to be ultra patient, the ideal play would be it actually over time returns back to this mega volume area. And I want to go play and dance in that arena just because of the significance of it, the amount of people who transacted. Clearly, there's some big players in there. They moved in at that point. They were kind of a part of this run up once they took control of it. You can just see that's not even that long of a trading range. This is just from August to November, and look how much volume was transacted, and then look what happened after. So for me personally, that would be an ideal trade. Now, maybe I have a shorter term time frame. I'm looking to swing trade quicker. So I could wait sort of for a pullback here. If it retests, maybe we get a sweet double bottom there. But the other thing that you can utilize with this information is look at the lack of volume as well at this price level. 193, there just seems to be no volume, despite price going into this region quite a bit, right? I mean, that's actually that's some serious price history. I can see it touch those levels here, touch them here, touch them here, touch them here, but still so little volume. There's a number of ways you can look at that now that you have this information. For me, what I find very interesting about that is I call them volume skips. There's so little volume there that it's almost kind of bullish, actually, if price does turn up. because there's just no one waiting there to sell or buy, and it's a volume skip. That's how I see it. I don't have exact data on it, but there's just sort of this element of it gets into this empty air pocket and it just skips. It's see ya, I'm out of there. I rarely do see it just tip back down, but of course it can happen. But those volume skips are super interesting from a fast move perspective. That's my viewpoint, could be wrong. But as you get really good with volume, you can start to think about it in a similar way. So now we are 20 minutes into this masterclass that I have been working on, and you've got a feel for what traditional volume is, and you know advanced concepts, just scratching the surface. I've got deep dive videos about this. The TradingView YouTube channel has deep dive videos on these volume topics. Go get some deeper dives on those as well if you're looking for that, because I want to keep this as a high level and then go further and further as my sort of channel grows and I make more of these masterclass series. Now, keep in mind that there is a difference between looking at these volume types and charts and actually volume indicators. So, indicators are really an interesting concept in the world of volume, and they're slightly different from what I've been showing you because indicators are essentially sets of code that look at the price action. You know, I should pull up volume here. That will look at price action, and in this case, look at volume, and then create a equation to display a line, a chart, a visual that is based off of that data. So it's an indicator, and you can overlay that indicator on your chart. So there are indicators about volume that are fascinating. On balance volume, volume weighted average price or VWAP, accumulation distribution, money flow, Chaikin money flow, and many, many more. Now, at a very high level, the point of this video is to get those investors and traders, pro or new, those looking to learn more, a high level intro to this specific topic. So rather than going through all of these indicators, I'm going to stay with the theme of showing you some more examples. And as my channel expands, you'll get more deep dives about these topics. But volume weighted average price is an indicator I have to talk about because it's probably the most important indicator in the volume space. So while time price opportunity and volume profiles are these great data visuals for visualizing price, now we look at volume weighted average price, VWAP, which is, as mentioned, an equation. There is a set equation to VWAP that is calculated specifically for you based off of all of the information. So here's anchored VWAP. Anchored VWAP, or volume weighted average price, represents the average price of a security weighted by volume, and it's commonly used as a trading benchmark. I would add that it is a very professional volume tool. This is why I personally love volume weighted average price and why I'm not spending so much time on the other indicators is because volume weighted average price is actually used by the professionals, the true money managers, hedge fund managers. When an acquisition happens between companies, this is how you know VWAP's the real deal. Oftentimes you'll see that when an acquisition happens, a partnership, some sort of investment, announcement, you'll see in the legal filings that they use a volume weighted average price. How much more do you need to know if you're a retail trader that this is a very important tool? So on TradingView, you can click anchored VWAP. Anchored just means it's going to calculate from wherever I click. So you can see my mouse here moving around. If I wanted to calculate VWAP from a significant low, now what's so cool about this, by the way, is you can start to combine indicators. So why don't we combine one? Visible range. Let's see if we can get back to this level that we were looking at before. It's going to recalculate. Beautiful. Well, this seems like the significant low. Remember, we just discussed this. Still in Coinbase. Like, what happened here? Huge volume, accumulation, run up. Well, let's do our anchored volume average price, our VWAP, volume weighted average price, right from the start of this. So we click and it instantly calculates. And absolutely incredible that at this exact moment, I have no clues. I'm just recording this video. I picked Coinbase randomly. We're actually right at the volume weighted average price since this all unfolded. I mean, I can't wait to check back on this video in a week or two because that's just beautiful. I don't know if it's going to hold or not. I do not have a trade on this, all for educational, informational, but what a great coincidence. That's how I know this video was meant to be. So, as an example about these indicators and what VWAP does, volume weighted average price is just what it sounds like. It is the volume being heavily weighted to get to an average price. So, for example, let me show you this. You can see here Coinbase traded at like $185 a share. But let's say there was very little volume, which doesn't look like there's that much. Well, this price is going to be weighted at a lower value than, say, look at this volume spike. See this volume spike here, right there? Well, this volume spike is larger. And even though it happened at a lower price, it's going to have more significance on the volume weighted average price. So you've got this equation going on that is specifically designed to ensure that volume is supporting the calculation. Because, as an example, I think I don't know a highly illiquid stock, but there's probably some sort of cryptocurrency out there we could utilize. Let's just see, because crypto sometimes goes through this. So let's do let's see here. Let's do Pepe. Even though it actually has pretty good volume for what I understand. Let's do Pepe USD. So as an example, let's say for Pepe, look at the price per share. Wow. So basically, that's crazy. That's not even trading for a penny. It's a fraction of a fraction of a fraction of a fraction of a penny. So let's say, see this run up right here? Let's say only one coin traded every day on this run up. But down here, thousands of coins were being traded. Well, that's a very clear way to see that this price move, even though it's a huge spike, isn't that realistic. So you have to get a volume weighted average price. So you have to get an average price that is weighted by the volume. So this one coin traded run up, you have to wait for that. It's not as significant. So the volume weighted average price is going to look fundamentally different than, say, just a moving average, because a moving average does not include volume at all. It doesn't include it at all. Moving average is just price. So you can kind of see how moving averages can even be rather deceptive. But going back to our Coinbase chart, this is where volume weighted average price is beautiful. And as mentioned, you can combine these indicators together. So you've got your beautiful visible range here, which we utilize to select a point that we think is important. Now we've got our volume weighted average price that is anchored to that point in time. And it is calculating this average price of Coinbase with volume being heavily influenced into finding that average price. And just if you still don't understand it, average price, it's a lot like a moving average. So you've got a average price since this point in time weighted by all of the volume that is happening down here. In the description, I'll include the exact equation just so we can get that a little quicker. But now that you are understanding the basics of volume, how to track it on a chart, if you wanted to, you could download it on a spreadsheet. Now you are starting to probably get a sense of how you can utilize it to find anomalies that other people are missing, or to do research that other people are missing, or to spot key things happening on the chart that other people are potentially missing. And this is ultimately where you have to find your edge in markets. You have to do something or spot something that the market's missing in order to beat the market. I just made a video about outperforming the S&P 500, and that's largely who I'm talking about. You have to outperform these indexes and benchmarks if you want to be your own self-directed investor or trader. So ideally, now you have a starting point. You know the basics of volume, and you know some of the advanced tools and how the indicators work. Now, there are some ways you can trade volume. You can use volume as a confirmation. You can use volume as a breakout indicator. You could look for divergences. You could look for volume spikes, volume clusters. You could try to find these important areas on the volume profile, as mentioned. Then you can utilize these volume ranges to determine, how much, are you looking for, what works best for you. Maybe you back test some of this to ensure it makes sense. Is the volume too low or too high? Sometimes you can count up days versus down days and really use that to understand how that fits in on your time frame. Are you trading this by the day and minute, or are you looking to hold for years? This is quite important, but especially for your account size, as mentioned, all of this does tie back into liquidity. Is it easy to get in? Go look at the volume. Make sure the volume is there. Is it easy to get out? Once again, make sure the volume is there. Can big money trade this? Well, it's kind of shocking. It took me 30 minutes to get to this point, but this is pretty important because let's say you are Fidelity. Now, Fidelity has, I think, 15 trillion in assets under management. 15 trillion. Fidelity is then not going to trade small caps or be big holders of small caps. Apple has a $3 trillion market cap. Look at the volume, by the way, here. This is 318 million shares at a 3 trillion market cap. This is huge money. So if you're a large fund, mutual fund, institution, you're creating indexes, you're going to look at volume first to ensure you can even trade it. So also then, as a retail trader investor, you want to make sure you have this information, know what game you're playing in. If you play in small caps, if you play in meme coins, these are areas where there might not be a whole lot of institutional money sloshing around. It could very simply just be you and a few other people going back and forth, which could be great, but also quite risky just because of, is that the game you want to play, essentially? Now, slippage is another important concept. Slippage refers to getting bad fills. Now, this mostly happens when you're playing in areas that don't have much volume. Because if you're trading something that doesn't have much volume, the spreads might be larger. So if I go to a 1 minute of Apple, look at the volume here, these spreads just are not, they're just not nearly as not nearly as wide as what a sort of less liquid instrument is. So if you were to look at all this trading activity, you would probably see that there were 1 penny differences, meaning Apple here traded at $232 a share and 24 cents. That could have been the ask. Then the offer was just a penny away from that. Now, if you go to the smaller caps, let's just go back to Pepe, for example, you're probably going to find that Pepe might have a wider spread just because of the difference in volume and people transacting there. And slippage occurs when you go to place a trade. So you think, for example, that Apple is worth $232 a share and the market's liquid and you just want to sell it for $232. But there's really not that many buyers there at the moment. There's not a whole lot of, people willing to take your trade. You place your order, maybe do market order, and it just tanks because no one's there. No one's online to buy your trade. No one's around. There's no execution. There's not enough volume to hold it. There's your slippage. It slips right through what you thought it was worth. So a very important point if you're trying to get the best execution, you're trying to get your fairest market value. Well, slippage, no market makers, big spreads. If there's little interest in the actual trading activity, then really there's not an easy way to get in or out. And this is just me attempting to visualize that a little bit, your entries and exits. Big spreads will often sort of translate to these larger buy pops, sell drops, buy pops, sell drops, because there's a spread between the bid and the ask, larger spread. Tight spreads like Apple, you will often see these forms of quick little, fast price action because it's one penny differences. This could be $5, $10 differences. And oftentimes you might even find this on really, on assets, especially stocks with really large prices. So Berkshire Hathaway is one of my favorite, by the way. They have some of the most remarkable spreads you'll ever see. Berkshire Hathaway A shares trade for $683,000 a share. Well, if you were to look at the spreads, the market's not open while I'm recording this, it might be like a $10,000 difference sometimes. It's truly jaw dropping. If you really want to see this in action, go watch Berkshire Hathaway trade the A shares, and you will see some large spreads and you'll see some just fascinating volume occurrences within this as well. Now, of course, you can do volume and technical analysis, combine the two of them. And I think I've shown you a fair amount of examples of that. I just want to stick to Coinbase because now I'm starting to know the chart better. But as mentioned, if you think you found a level, either with your indicator or because you maybe you're drawing, right? Let's just say you've drawn this trend line. Now there's a lot of traders out there who just trade on the trend lines. I don't know what their win rate is or how they're doing, but I think it's wise to combine volume to really understand if that trend line, especially if you missed it, makes sense at this point. So you can combine the two. We've got our volume weighted average price here. We can see our visible range volume profile here for the price levels. So these would be the next price levels that it reaches into. It's interesting because for me, that means it's entering that sort of skip area. If it can get through there, maybe it skips. And this is a really nice way to plan with multiple pieces of information. Not only your drawings, your trend lines, your fundamental analysis, but the actual sheer quantity of trading volume that's happening by specific dates and price levels. So, really, the key aspect here of all of this, by the way, is that you need to find what works for you. Because you've probably now heard me in this presentation explain many different concepts. I've glossed over a few indicators, but there's many more. I've shown you these different chart types, but there's many more. We've started simple and traditional with volume, then did volume weighted average price. We did time price opportunity. We did volume profiles. You have to find what works for you. There's no one size fits all. And it really is all about what you see in markets and what works for you. Eye of the beholder. It truly is eye of the beholder. You are your own artist. Go see what works for you, back test it, study it, make sure it makes sense to you. I think if you're watching this video whereby I'm just trying to give away all this information freely, I've been doing this so long, it's sort of my mission. I want to just give everything I've learned back to all the self-directed investors and traders out there. And it's really a critical thing here is that you learn these small nuances of volume to better yourself in markets. And also, you might find some specific aspects that you utilize, or maybe you did not know you could utilize in all of the way that you sort of analyze markets from this day forward. And now is probably a good time to speak about supply and demand as well. Because while all of this has covered the volume concept, the indicators, the chart types, we're going to wrap up really on the basics now, which is supply and demand. This is Economics 101. Remember, supply and demand is all about how many people are willing to buy something at this price, how many people are willing to sell something at this price. You have a market, supply and demand. This has been probably the most historical test of time when it comes to markets. It is what makes a market, supply and demand. When you walk through an iPhone store and you see it's crowded and phones are flying off the shelf, you can get a sense of, wow, there is serious demand for that. And Apple is able to supply it at that demand. Or maybe they're secretly constricting supply to increase the price and make the demand squeeze a little bit. This is where volume comes in. This is the basics of volume. Now that I've shown you this long 35 plus minute tutorial, you now have just coming back to the 101 concept, the introductory, the educational concept, you now have the supply and demand component to just take you back if you've ever taken an econ course. And in this example, you can see it's pretty interesting. Well, does this show demand? Just green candle, green candle, green candle, green candle. And look at the volume increasing with those green candles. And look at the price. You just can see that, wow, there's demand for that. And it is exceeding the supply. And you can see that in the increasing price as buyers are coming in. And you can tie that right back into the price action. And with this information, you can decide who's winning, the bulls or the bears. Also, is it opening in a strong fashion a weak fashion? Is retail involved? Is big money involved? Is there indecision? These are all the questions that you can ask yourself. You might see charts move the other way, though, which is quite important. They could theoretically move the other way, which is looks like this, just going straight down. And what's so interesting about this chart is you can utilize a chart like this to understand just how poorly it's trading each day. For example, look at all these red candles. Well, that means the open was here, close was here, open here, close here, open here, close here. So if you're following my mouse, all these red candles showed opened high, closed low. You don't see this often, but you can start to count these candles, and the ratio of opening high and closing low here is just atrocious. There are only 1, 2, 3, 4, 5, 6. There are only 6, if you count that, 7 actually. 7 green candles on this chart. The rest are red. And if you looked at volume coming across now, you could just say, oh my gosh, the volume at the open is super weak. Volume at the close is not great. And it's just sort of a recipe for disaster at that point. It really means that there's more sellers. There's not a whole lot of buying volume. Also, as prices going lower, it's trading at 90 cents. Keep in mind the concept of institutional money. Now you start to run into that issue. Who's actually coming in to buy this stock now at 90 cents? Just not worth it to them if they have trillions under management. And if we flip that around, you can see the opposite component. Bulls win, bulls win, bulls win, bulls win, follow through, bulls take the castle. Look at these volume bars. So ideally, you're starting to really get a feel for all the components of volume and how you can use it. And before I just go back to the chart and give you one more example, just remember nothing works 100% of the time. This is all for you in your journey to get started and to learn about the different ways volume works. That's the number one limitation of this. You have to remember that. But if you find something that works, a percentage of the time within your risk reward ratio, you can be very, very profitable. So as we go back to the chart here, it's quite important that everything you take away from this video is a starting point, a high-level overview into the world of volume with almost some real-world examples as well. So I hope this helped you, and it's a part of my masterclass series, so be subscribed, and I have a whole lot more coming on the way. In fact, in the videos that I will be publishing about volume, I wish to cover all of these indicators, so you have some beautiful walkthroughs video. I really want to get deeper into these advanced tools like time price opportunity, and I even want to revisit the traditional components of volume so you have some more trading examples. Just be sure to subscribe, and I hope you enjoy this video. Thanks for watching.